Factory.tech. If you're in the beginner show right here on YouTube, listen, don't panic. This is a place you're going to learn through immersion. We're going to showcase for you exactly what we do here on Algo Factory.tech. And if you got some questions, soon we will be able to do live chats. You'll be able to ask us questions. But in the meantime, our free members have access to us in our Telegram channel. So with that being said, I want you guys to look at Algo Factory. Don't look at Algo Factory. Join Algo Factory. Be about Algo Factory. Trade your job, upgrade your life. Let's get into it, Cowboy.
Amen. Yeah, this is a cool spot. The people are joining in on YouTube, so that's really cool to see. And it's Monday morning, so our Monday morning is usually, when it comes to what we do at Algo Factory, it's usually kind of a chilled out event. So basically, what we do is we just kind of go over what's happening, what we see coming up this week in the markets. We take a look at actually the resource that I use is forexfactory.com. Let me see if I can put that in the actually it'll let me put links in there, right? Let's see here.
Try it. I think you should be.
See that when you got so many tabs open you can't find it. Forexfactory.com. All right, so I just put that link in what should be the YouTube chat. I know that people in our other groups probably have it by now, but I'll throw it in there too. And so basically what I do is I take, okay, you already did. You threw it in there. We take a look at the economic data that's coming out this week. So, widely here on this channel, what we do is we do what's called technical trading. We do technical analysis. We take a look at what the charts is telling us, what the charts are telling us is going to happen with like the price of whatever asset or whatever currency pair. And we use the chart data to make whatever decisions we make, whatever trades we're going to make. We basically do measurements, and we use indicators that are based on mathematics. And this is something that I've taught people how to do this for years now. We've been teaching people how to do this since 2018, V and I, off and on. And so people of all levels can do this. Anybody who has been through high school algebra should have the skills to do this. So don't be afraid. We're Algo Factory. We build algorithms here. Now, again, this is something that we like to talk about.
What if you slept through high school algebra? Would that be a problem?
Well, I'd say that the vast majority of our body politic has slept through most of high school, so they made it.
There you go.
Anyway, so so I've taught people with who really didn't think they had it in them. I've taught plenty of people how to do this work. And a lot of them have gone on to make their own trades with their own research and make quite a lot of money. In fact, so it's not an algorithm itself. Don't be scared of that word. I always try to point this out. An algorithm is just when you have a set of conditions that light up and you take a trade. Driving is an algorithm when it's obviously not trading. But when you let's just say, okay, you want to get from point A to point B, you got to make a left here, you got to make a right there, you got to make a left here. And if you follow, those things, then you end up there. But let's just say that at that third left, traffic is really bad, right? So your algorithm to get around that traffic is you got to make this right and those other two rights to get around that traffic. And then you get to point B, right? So that's a traffic diversion algorithm. It's so simple. Tying your shoes is an algorithm. So what we do here is we apply that logic to trading, and we start at the beginning, and we offer this for extremely cheap. The other few services I have seen that are comparable to ours cost about $300 a month. For now, we're actually at $49.99 a month, and that is like just giving it away.
For less than a month's worth of coffee at Starbucks, folks.
Oh yeah, 10 days of coffees at Starbucks, and in some cases,
you're right. For less than a week at Starbucks.
Yeah, seriously.
Have you seen the prices of Lapalupas these days and Frappalupas?
That sounds like a taco of some kind. I don't think I want to try a Frappalupa.
No, I don't think you should.
Freaking mixed my refried
700 calorie cold milkshakes, bro. It's ridiculous, and people are lining up like 80 grams of sugar, chugging it down their throats. Ugh.
Imagine not getting that sugar. Imagine not changing your body into a high pH, some acidic, low pH situation where cancer wants to build and where you gain fat, and
Yep.
you have all those gut problems, and then taking that cessation of that terrible habit that ruins your body, and then taking that money that you would have spent and all the time that you take to drive there and all that that you think is your Sunday morning pleasure, and then you turn that into your own personal energy, and you actually turn that into what could eventually be, depending on your effort and your determination, into an income stream. And not going to lie to you, this is not a get rich quick. This is going to school. It takes a while.
Yep.
So we got Cool Cat. What's up, Cool Cat in the chat? That's my boy. So this is a marathon, not a sprint. Don't think you're going to come in here and just all of a sudden make money. I do post my trades, so not all of them, of course. I don't post my day trades where I'm in and out in an hour or two, because I just don't. I think most people have like a job of some kind, or they have some other commitment where they're not able to sit in front of the computer all day. So I do like swing trades that last a few days, or I even go beyond that, maybe a few weeks. And I tell people what's going on. In fact, V, I saw you over in our Telegram over the weekend, and you saw my my analysis of a couple of trades, or at least of what I think things are going to do.
Yeah.
So let me see if I can even explode this big enough for people to see. So this was. I can't
share the screen because nothing's coming up as of yet.
Yeah, I appreciate that. Let's see here. I'm gonna first escape here. Share the screen. Yeah, the last show we had, I didn't even share the screen. I was talking for like 2-3 minutes at least, and then like everybody was all like in the chat, dude, can't see anything. And like eventually we figured that out. I was embarrassed. Hey, I'm gonna go over to an analysis.
I'm to blame as well. I was busy messaging some institutions on one side.
Yeah, you were getting kind of hit by some.
Yeah,
some
odd. I never get it. Like between 8 and like 9:30, 9:45, close to, I have nothing. Like I have nothing coming in, and all of a sudden it was coming in at 8 a.m. I'm like, oh crap, what the hell's going on?
That's all right. Those are the kind of calls that you just got to take. When you have the multi-billion-dollar wielding individuals that need something. But that's that the reason that we have so much great data from V the Gorilla is because he deals with those people. So that's one of the reasons that we are successful at Algo Factory, and those of us who have been following Rogue for years is because those kind of people have been able to give V some information that he's able to impart on us. Sometimes he'll impart it here at the Algo Factory. Some of it never sees the light of day over at Rogue. Yeah. That just happens here. So so that's what happened there. Now this is I put this. Let me zoom so you can see all the writing and stuff. This is actually one of the two analyses I did over the weekend based on Ripple. So this is XRP. This is a cryptocurrency, and what I do is I used a combination of data from the Kingfisher, which gives me liquidity nodes. I'll flash over to that screen really quick. And I will put a link in the chat. Okay, so this will show me liquidity nodes on pretty much any given crypto that has at least a derivative that's available. So the kingfisher.io is really cool. Like I said, I'll put that in here. And if V hasn't done it already, I'll throw it in. Yeah, I'll throw it here in the Telegram as well. So, and on these shows, on these morning shows that we do, this beginner show, we give priority for question asking to those who are in our paid group. However, if they're not asking any questions and people in the YouTube are, then we will answer those questions for the moment. Now, as time goes on and our, we haven't really even advertised yet. So as our service builds up in customership, I can't even think of that word. Good Lord. As our clientele grows,
our membership grows.
Membership, thank you. Yeah, as our clientele grows, we're not going to be able to field all the questions. So we're going to have to raise the price, right, for those who want to ask questions. However, those who have been with us from the start and those who don't let their membership lapse are going to actually still be able to have all the benefits of the highest level membership without paying for it. They'll just pay that same price they get today. So long story short, whoever's with us right now gets the top level membership, if you will, and they're going to always have that at the current price. So we go up to $200 or $100, whatever it is, for the top level stuff. Anybody who lets their membership lapse is going to have to come back and pay that. So anyway, if you want to get that great price, then there you go. So now I thought this might happen with Ripple. As you can see here, I thought that it would head down. What I told people was that if this breaks up, if the algos say this is going to break up upwards like this path, I would let everybody know and I would take that trade, and it just never happened. And I did have a feeling that it would break down. And the reason I did was because there is a Kingfisher node at this, and what that means is that there's a lot of liquidity, okay, right here at this box that I drew, this teal colored box, and then a big one much lower, and price is going to want to head down that way. And now that price never made its way up to what was kind of a key area of resistance with some liquidity up there, and then this and the actual original title of this analysis was called "When Pattern Trading Goes Wrong," because a lot of people are obsessed with pattern trading because it's a very easy thing to do. It doesn't require quite as much brain power to just look at what looks like a pattern and trade it. And so this pattern kind of like, hey, this looks like a pattern, and then you just like draw a pattern and you draw a triangle, and then it doesn't work out and people lose a lot of money. And so the triangle actually really, didn't play out at all. And I didn't think it would. And the original title was called "When Pattern Trading Goes Wrong." And it certainly did. So that's just a bit of a warning. It happened quicker than I thought it would, but it did follow essentially what I thought would happen. In a sense, it would head down to this level and bounce. It just happened a lot more quickly than I thought it would. And in part, that's probably going to do with some of the Bitcoin price action, because most cryptos do follow Bitcoin. So, but that, this is something I just did on like a Saturday night, I think at midnight. So, these kind of, analyses that I do, I just do them, and I post them for our paid group. And now that it's played out and it's done, I can go ahead and show everybody here what's going on. So just to show you a bit of the goods, I don't see any questions in the lab. So I guess what we can do, and I think Cool Cat's the only one talking in our YouTube right now. So we're brand new. We don't have like a whole lot of viewership at this point. So I guess what I can do is just start talking about how we use Forex Factory. And unless V, you have something you want to kind of add.
No, I have nothing to add at the moment.
Okay. So Forex Factory is a great way that I start my week. And what it is basically, it tells you what the economic data is. Let me go back to the chart here and zoom it in, because everything that I just showed you is going to need, it's going to be hard to see. I needed to not zoom to show you what I just showed you, but I'm going to go ahead and revert back to what I usually do over here in the charts before I forget. So give me just a moment. That way when we come back to it, it's going to be legible. I use TradingView a lot. So what you're looking at is called TradingView. It is a charting program. And what you're looking at here actually is a Bitcoin trade that I entered, and I'm not going to show the details because it's still fresh into that. So we're not going to show that to everybody. Only those who have seen it already, that saw it over the weekend, they're going to see that. So let's roll over to the Forex Factory. All right, so forexfactory.com. Now, TradingView that I was just talking about, TradingView has its own area where you can have the news events, just like this. It shows heavy impact news events. It will show similar data, if not the same. So it's a valuable way of doing it. The reason I use Forex Factory is I like the way it's laid out. I can just toggle back and forth between the screens. Not that you can't do that with TradingView. It's just, and to put it simply, I've been using this for so long that I'm just stuck on that. Quick question from 2020 Cool Cat: are we doing FX, equities, and crypto? Yeah, yep. Yeah, we do FX, equities, and crypto. Equities, I won't trade them here. It's not something I've done. I mean, not to say I wouldn't, but FX, we're more currencies people. Part of the reason is because equities, to focus on those has historically been a mistake in my own trading. And that is because, for example, we're probably going to see a time not too long from now. And I'm only guessing here. Do your own research. Nothing that we say on here is investment advice. Make sure you contact and consult a licensed professional before putting your money on markets, because you can lose money. It is inherently risky. And everything we say is only our opinion and not that of any other company that we talk about. So all of that disclaimer out of the way. When it comes to equities, there might be a time when they all kind of crash, and we see that possibly happening. It might be quick, it might be longer than that, it might only last weeks, it might last months, it might last years, we don't know. But as that happens, there has been reports out that they're going to outlaw going short. And what does that mean? Well, when it comes to equities, most people just buy a stock and then they hold that stock, and that stock goes up, and then they sell it and they make money if they are fortunate. A lot of people will, when the stocks are going down, they got nothing to do in the market because they don't understand how to short stocks. And shorting a stock is, to go through the technical process of what it is on an exchange. Basically, you are borrowing a stock from somebody so that you can sell it at a higher price. And then the price goes down and you buy that stock back at a lower price. And then you give the difference to somebody, that same person that you borrowed it from. So effectively, you're kind of taking profit ahead of time. And that's more than you really need to know. Maybe not. But the long and the short of it, so to speak, is that when you are going short on a stock, you get to make money on the way down. And they're talking about taking that ability away, and it's been done before. So, they don't want people shorting. They don't want the market to crash so hard because retail is getting wise, and retail is going to go ahead and go short because retail is smart enough to do that at this point, because they're forcing everybody into the markets because you can't make money at your regular job because either robots taking over or COVID shuts you down. Everybody's now all about, Wall Street bets and all this stuff. And so long story short, they might take that ability away. So I'm not going to focus on equities because equities are seasonal. Equities are good for a short time and then they're not. And I mean, everything's seasonal. Crypto's seasonal too. However, when with crypto and Forex, inherently you have the ability to go short. Certainly with Forex, crypto is, I use KuCoin. There's also a few others like BitGet. And there are crypto derivative sites. So basically, you have to make sure that, first of all, you've talked to your licensed investment advisor and made sure that's right for you. And secondly, you have to look at your jurisdiction. I think New York might take issue with that. But as far as I know, there isn't a law against it at this point.
New York, in terms of crypto in New York?
Yeah.
I think New York residents, they direct you to New York Department of Finance registered exchanges like Coinbase Prime. You can do Coinbase Prime, you can do Gemini in New York, and I think Kraken. That's about it.
Yeah, but can you do derivatives on those sites? Can you short?
Can you Coinbase Prime? You could. Yes. Coinbase Prime. Yeah, Coinbase Prime is full on trading, man. Yeah.
Okay. So at least Coinbase has options.
Gemini and Kraken.
Okay, find whatever is like allowed in your jurisdiction if you want to do crypto derivatives. However, derivatives are using leverage. There is a lot of, I do not recommend that for beginners. Using leverage is dangerous. You can lose a lot of money. So that's something that, you need to learn. Now with Forex, that's inherently using derivatives, leverage, right? So you can't really use Forex without going at least like 30 or 50 to 1. And that's, I'm not going to go into an explanation here. I think I did last week. But to make leverage a simple explanation is you're borrowing on a very short term money from someone else to augment your trade. So let's just say you're like at a 50 to 1, like on Forex, how it usually is. Then you're borrowing 50 times the amount of money. I see a question from Stuart. I'll get to you in there. Stuart, I don't want to talk about that on this show because what you're asking about is only for our paid group. That's a piece of my algorithm that I don't share anywhere else.
Yeah, so we'll about 9 minutes.
Yeah. So let me answer this question about, well, it's not really a question, but when it comes to derivatives, if you're 50 to 1, that means you're borrowing like money that augments your trade times 50. And that means that you're losing your money 50 times as quickly, and you can lose all of your money anytime you trade derivatives. Like when you buy a spot equity, which just means you're not borrowing any money. You're like buying a stock. or like say when you're buying spot crypto or even spot currencies. I mean, unless those companies go belly up, then you're always going to have that crypto or that currency or that equity, and you can always sell it for a certain amount as long as those companies are not going belly up or some very, very weird other circumstances. So you don't ever lose all your money in those under those circumstances, under the lack of those very odd circumstances, right? So it's a good chance you're not going to lose it all. But when it comes to using derivatives and you're borrowing money, you actually have to continue to add money as the price goes down to avoid what's called the margin call, and you can lose everything. So really, if you're going to play the derivatives game, just make sure you understand what you're doing. That's just be careful. Now, again, what Stuart's asking about is, I'm not going to name the indicator, but he asks, is the indicator blank in TradingView, aka blank, or is it different? And the answer is it's that one. What you just said, Stuart, is what that indicator is under, right? Now, that indicator is the linchpin, if you will. It's a very great, stable, kind of a reversal type indicator. I don't really trade reversals as much. I'm a continuation trader. That means if price is going up, I look for quick pullbacks, and then I buy those pullbacks, and the price will continue to go up. And that's how I make my money usually. I don't usually look for the big turn, the big, price is going to turn around, we're going to sell here. That's not usually how I trade, but the knowing where those are going to happen is very useful. And that indicator that Stuart mentioned is pretty much central to everything I do. It's the one indicator in the like tens of algorithms that I've created that is, that's always there. So, and that is the proper, what's the term, acronym for that. So, anyway, so back to Forex Factory. Okay. So anytime that I'm trading, I avoid the news. And we talked about this a bit last week on the beginner show. So go ahead and go back and, and look at the beginner shows on YouTube. It's all free. And basically, I'm going to put also in the chat in youtube.algofactory.tech. I put our own website. Please come visit that. Please come join us. So anyhow, we talked about short stop runs. Basically, we talked about a squeeze on that last show. It might have been the show before, Thursday or Friday. And what that means is that the market makers have visibility into where everybody's trades are. They have visibility on the chart as to where people are going to liquidate or people's stop losses are. What that means is that the people who really have all the money, they can afford to pay for data like $20,000 a month for a Bloomberg terminal, basically. And that's the simple way to do it. It's not a cheap way, but there isn't really a very cheap way to get this data. And that data tells them that if they push price to this area, then everybody else's trades are going to get liquidated. They're going to get stopped out. People are going to lose all their trades. Now, when that happens, those people who have all that money, they know that they can take advantage of that, because when those trades get stopped out, they can have their orders ready to fill right there. And that's like, let's just say that the big money wants to go short. Let's keep it simple. The big money wants to go long. The big money wants price to go up, right? So we'll briefly chart this. See if I can find a friendly chart here. Okay. Let's see if I'll have to zoom in here. Okay, so we're going to just do a hypothetical here. And let's say that there's a news event, and I'm going to use a vertical line to denote when that news event is supposed to happen. And let's say that the big money wants to bet on price going up, right? So what they'll do is when the news event happens, they're going to trick everybody to make them think that the price is going to go down. They're going to force the price downward, right? Like this, right? So we'll go ahead and use the replay function. I have an entire class over at algofactory.tech on how to use this replay function in gross detail. Spent a lot of time on that class. So, if you want to know how to do this, go to algofactory.tech, come join us. It's basically like it costs nothing, $49.99 a month. It's nothing. It's very cheap, and it's a tax write-off. So, for your business, if you open one, talk to your accountant for that. So they start forcing the price to go down to scare people, like, oh no, it's going to go down. It's going to go down. You got all these people that are like, sitting there at their screen, and then they're waiting for that news event, right? And that news event happens. And then what they're actually seeing happen on their screen, right? It looks like this. Oh, it's going down. Oh, it's going to keep going down. Okay, we got to go short. And so what they do is they bet on the price going down, right? And in Forex, that's really common. Crypto, it's pretty common, but Forex especially. And then what they do is this area on the top here, this is called their stop loss, right? So if price goes above this line, like right here, then they're going to automatically exit that trade, because when price goes against you, especially in Forex where it's a derivatives where you're using leverage, you got to get out or you lose all your money. But that's just how I trade. I always use stop loss, always. Okay, so they have their stop losses up there. Their take profit is way down here. So if price goes all the way down to the bottom of this green box, then they're going to take profit. They're going to get out. They're going to make their money, right? So they're going to risk, in this case, it's like 2.8 to 1. So they're going to risk $100 or $1,000. They're going to risk $100 to make $280, or they're going to risk $1,000 to make $2,800. That's pretty, that's a nice risk to reward ratio. That's their trade. They think they're going to get rich, but in the background are these, very wealthy people who have, guys with computers, and they can see where all the data is, and they know everybody's stop loss, everybody's area that the computer is going to automatically take them out of the trade. They know it's up here where that box is, right? It's all through this area. Now the Kingfisher tells us that data. And with crypto is kind of cool. We have that data, and most people have no idea about that. And even if they do, they don't do it because people are just lazy. But basically, they just want to bet and gamble. That's fine. We make money off them. But what happens is people are like, oh, it's going to go down. It's going to go down. And all of a sudden, all the people panic into the trade. They're seeing it go down. They're panicking in. They don't understand how things work. And once enough people have gotten in, the big money forces price back up. And when it hits that box where everybody's stop loss is, then those stop losses are what's called a buy. It's an automatic buy. It automatically buys to get people out of that short trade, because shorts is basically selling, right? So the opposite of selling is buying. And that forces price up. So all the smart money got in down here at the, down low. And then these orders that are getting people out of this trade force price even further up, and it fills more trades for the big guys a lot of times. And then the price continues up, and it just, all these people who panicked into the trade lost their money. They lost it right here. So Forex Factory tells us when these events are going to be. And we had one today at 6:30 a.m. Empire State Manufacturing Index. This red folder means it's a high impact event. It's probably hard to see on your screen, but he actually says it right on there, high impact expected. And then here, the data said it had the expected, which is minus 3.7. If you click on the folder, it tells you the data. Actual greater than forecast is good for currency. Remember, this Forex Factory is based on currencies. So we're looking at dollars and yen, and that's what Forex is. Okay. So as opposed to cryptocurrencies, which is what we all know what that is. So if the data comes out greater than the forecast, it's good for the currency. So it came out lower than the forecast, which means it's bad for the currency, which means the dollar is going to go down based on that, which means that basically at 6:30 a.m. today, if I look at this chart, we should have seen a bit of a spike up in the pound. That was supposed to be a high impact event. I'm not sure how high impact it really was. The Empire State Manufacturing Index has historically been kind of weak lately. So right at 6:30 price, it had a little move up, right? So people went ahead and panicked and went long, like right here. And then they got knocked out of the trade, just like I was just talking about. Okay, so to zoom in on this, what happened this morning, people saw the news come out, 6:30, price started to go up, people panicked and went long, and then their trade looked like this. Where's my box here? There we are. They probably went long here because they saw price going up. They all panicked. Oh, we got to go. It's just going to go up. The news said it's going to go up. And then they had their stop loss like down here, maybe. And their take profits, who knows? They're going to take profit up high because they're going to be rich today. We're going to make money. And then all of a sudden, their stop loss down here below structure, below price structure is probably right about here. And look at that. Price has already been kind of nuked. They already got their trades nuked. And all those people, all the smart money, they probably got in like right up here. Now it's Monday morning, so there's not a lot of volatility prior to market open. Market open happens in about 30 minutes. In fact, we're at a point now, free YouTube people, where we're gonna move on. We gotta go over to our Telegram group. We're gonna make the live session only for our paid group. We do this every day, 5 days a week. We got me, we got V the Gorilla. We're both here every day. There are very few exceptions to that. So come on over to algofactory.tech. Link is in the description. We love you all. Thank you for joining us. We're gonna hop off of YouTube.
Later, YouTube.